I'm Donald Leggett, and welcome to Share Views, brought to you by London South East. Our guest today is Clive Carver, chairman of Caspian Sunrise, the oil and gas exploration company which operates the B&G contract area in the west of Kazakhstan. Clive, welcome.
Thank you very much.
Let me kick off by explaining that it's been a busy weekend in Kazakhstan for Caspian Sunrise, or Roxy Petroleum as was.
Yeah.
The big news is the confirmation of 3,500 barrels per day initial flow from deep well A5. So talk us through that.
Yes, I think as people who have followed the company for some time will know, we have been looking to bring one or more of our deep wells into production for some time. Well A5 initially started drilling in 2013. We had problems with the well and with all the deep wells because of high pressure and high temperature. And we've successfully, in the last week, brought that well into production in terms of a sidetrack drilling to get around some of the blockages we've had. And in the time that we had the well open, it flowed at the rate of 3,500 barrels a day, which was a little bit more than we thought it would do. We're hopeful it will increase over time as the well cleans itself out. And we now look forward to start the formal 90-day flow test in the next few days, and that really will set the formal expectations for how productive that well is going to be. But so far so good with that well, and I think it does mark a turning point in the development of the company.
So you've taken my next question. It's 90 days before you can get the flow rate confirmed.
We're going to do a 90-day flow rate test. I think we will be announcing as we go through from time to time how the test is going. So I would imagine periodically during that we will make announcements probably on a monthly basis. The key thing with the 90-day test is it gives us income, because oil that we produce during the test we can sell. And also it gives information for Gaffney Klein, our experts, to assess the reserve base.
Presumably this augurs well for future oil production at the B&G prospect. How many other deep well prospects do you have there, and what are the next steps?
So there are two deep structures on the field, Ershigol and Yelemis. To date we've drilled 3 wells, deep wells, 5,000 metres, give or take. Each of them was stuck. A5 has been unstuck. We're working to unblock both A6 and 801, and we've got attempts to do both of those before Christmas. One of which through a workover, and another one through a different technique. It could be that we have another one of the wells working by Christmas. My expectation is that all 3 of these wells will actually come into production in due course, and certainly I'll be disappointed if it's not in the next couple of quarters. If they're going to flow at the same rates as A5, plus the production we've got from the shallow wells, which have done very well, we're looking at in excess of 10,000 barrels a day within months rather than years. But
it does sound as though it's quite a tricky place to work, the B&G prospect. I can hear there's a caveat in your voice, if not your words.
Yeah, I think the difficulty we've had is that it's very high temperature, very high pressure, which means that the price is good if you get it. The quality of the oil is very good, the quantity of the oil is very good, but technically it's very demanding. So although I'm confident it's going to happen, it's difficult to be confident exactly when it's going to happen. Hence it's taken us a lot longer to get A5 into production than we thought it would do. Now we know how to do that. Hopefully that will help us in doing the other wells. But it is that caveat. It's a difficult place to operate because of temperature and pressure.
How confident are you that you can actually deliver against these quite demanding timeframes in quite a difficult area?
I think I'm confident that that's going to happen. I think if you set yourself until the end of the current licence, June 2018, I'd be very disappointed if we hadn't got all 3 of the deep wells flowing, and also had more success with some of the shallow wells.
Okay, let's talk strategy. A few days ago you announced the early licence renewal for the B&G contract area. You've opted for a 6-year extension of the appraisal licence rather than going for the full production one. So why is it better to keep exploring rather than go for the full production licence?
I think the essence there is it's both. So what we've done is we have got an agreement to extend the licence as a whole for 6 years. So across the whole block we can take 6 years more on the appraisal side of things. But we are able from next summer to convert structure by structure to full production. So what that means is the structures that are more advanced, such as the MGF structure, which is a shallow structure. We've got 5 producing wells there, hopefully 6 fairly soon, and also the deep air shale structure, if we can get A6 working, they would be ready to move straight to full production next summer. Had we done as we said we were going to do before, we'd have been forced to move everything to full production. And there are some of the structures that we're working on where we would have forfeited areas of the field for production, because if you don't drill them out during the appraisal period under the rules, you can't go back and then claim them for production. So the way we've done it, we've got the best of both worlds. We lose nothing. We have the ability to maximise the income, but also we have 6 years to further develop areas of the field that we'd have forfeited otherwise. So I think for us, and for me in particular, I think this is just as bigger news as the success of at A5.
Okay. Our investors have been noting that they're describing it perhaps as a change of strategy. Or is it just simply when you run an oil and gas production company, you've simply got to keep adapting to whatever the strengths of your strategy might be at that moment?
I think it's both. I think it really isn't a change of strategy. We have got exactly what we set out to do, because we have all the fields that we want to put into full production going into full production at exactly the time we expected to do that. What we have is a bonus that we have negotiated, that we can avoid losing out on other parts of the contract area, where to get those fields into full production that are ready, we'd have lost elsewhere. But I do think we have to manage the company in response to events, and we found it much more difficult than we thought we would do at the outset to drill these deep wells, but then much easier to drill the shallow wells. Therefore, some of the focus over the last few years has been more on the shallow wells. That produces income, which then allows us to keep developing the deep wells without undue dilution to the shareholders.
So what do you see as your various options going forwards in terms of actually extracting those reserves and exploiting them?
I think the first thing to do is to maximise production and reserves as at the licence renewal. So in terms of the shallow wells, and the MGF field is the prime one there, we've got 5 wells that are drilled with a capacity of probably around 4,000 barrels a day. We've got another well, 146, which should reach total depth in the next couple of weeks, and we'll certainly have that tested the next month or so. That is the cash flow that's going to come from that. Is going to be very sensible. We then look at the income we're going to have from the 90-day flow test in A5. And again, that's big numbers. I mean, if you're producing 3,500 barrels a day, even at the domestic price, which is now around about $20 a barrel, that actually helps fund quite a lot of the way forward. We get to the licence renewal, we move those 2 fields. Hopefully, if we get A6 unblocked as well, I think that would constitute enough at Airshiggle Deep to move those 2 fields to full production. And then we look to do infill drilling on both those 2 fields, and that can be done under the full production licence. In addition then, we've got 2 other fields. We've got the Yellowmiss Deep field, where we're looking to spud another well in the first half of next year, another deep well. And we've got a new structure, which is well 808, which is inconclusive at the moment. So we can take some of the cash that's going to come out of MGF and the deep ace, the Airshiggle field, and actually see whether there's something actually there with the new structure at our leisure.
And what is spudding a well?
Spudding a well is drilling the well. So that's when you first put the drill bit into the ground. And we anticipate spudding the next deep well in November on the Airshiggle side. That's A8. The kit is all there to do that. The groundwork's been prepared. So at one point we thought we may not drill through the winter, because drilling conditions in the winter are not as good as in the summer. But I think the success we've had at A5 encourages us to press on. So A6 will be spudded in November, and that'll be a 3-month drill. So hopefully by the end of Q1, we'll know whether we've got another successful deep well.
You said you were hopeful of at least partially funding the works going forwards out of existing oil production. Could you talk a little bit more about that for us?
Yeah, I think one of the big benefits of the licence renewal is that we haven't got to rush out and drill everything before the end of June to qualify for then using it for further production. So it means that we can pick and choose which wells we do. So if you look at the deep well, the typical deep well is about $10 million to drill. And we're looking to do 2 of those, one before the end of the year, one in the first half of next year. That's A8 and 802. Additionally then, we'll probably look to do another 2 or 3 of those. Because of the production that's going to come through from A5, and in particular because of the very high quality of the oil, we're able to do deals with our local oil traders who will pre-fund us. And in that way, we're actually using, to a large extent, the cash flows available from not just current production, but future production, which the oil traders will finance, to fund these additional wells.
How much into the future will they actually...
I think with the quality of the oil now we've got, with the, and particularly because we sell it at domestic prices, we could, if we wanted to, probably go 6 months into the future and sell that oil. And if you look at the economics of a well producing 3,500 a day, plus maybe we've got another 3,000 from the shallow, that's the sort of cash that can avoid us having to come back to shareholders to actually raise equity money to do drilling.
Yes. One of our chat board investors described you as a prime buyout target. Is that how you eventually see Caspian Sunrise, and how long will investors have to wait for that to happen?
We're a public company. We're very much in the spotlight, and with 99% of our asset owned, and the larger companies really having not done a great deal of exploration in the last 5 years, you would have thought if we prove up a decent level of reserves, given the fact that we have control of the company, it's in a good position for infrastructure, very close to some other big development areas. I think 3 of the big 10 in the world are within spitting distance if you look at the map. You would assume at some point someone's going to knock on the door and say, well, look, are we interested in a deal? And clearly we'll listen to what the deal is at that time. However, you can't rely that's going to happen, and certainly we're working towards making this company very financially strong and stable, with the view that we would anticipate becoming a dividend payer probably within 18 months' time.
That sounds like good news.
We hope so, yes.
To what extent do you see that you actually have to turn exploration into reality before the big boys are going to actually come in and be interested in you?
I think we have to recognise that depending on the level of the big boys, because they're all at different levels of interest, we need to have independently assessed reserves for both the shallow and the deep, and we need to have production certainly in excess of 10,000 barrels a day, I think, before the type of person that can afford to pay what we think the asset is worth is going to be interested. You know, this is 40 kilometres down the road from one of the world's biggest projects, Tengiz, where I think this year they're probably spending another 30 billion. If we can persuade people that the geology is similar through the results and announcements we make, then you'd anticipate if someone did come in, they would come in a pretty big way.
How much more funding is required, do you think, to actually get you to that point?
Well, not very much. If we can get these 3 deep wells working, as I said earlier, we can actually get over the 10,000 barrel a day level, and we've drilled those wells already. It's really just the incremental cost of testing, which in the scheme of things
so it's
is
the
not
10 million,
much.
The 10 million times 3 on the deep wells is
we spent that.
So
we drilled those 3 wells. We know we're going to get the funding for the next 2. So if we can get those turned on, these are wells that even under domestic pricing pay back very quickly.
How much money to date has been spent on getting you to where you are today? You're a merger of Roxy and Baverstock. So
yeah.
How much money have you spent to date?
The big number is about 130 million. So when we did the deal back in 2006, Roxy invested into the Aragon assets, and there were 3 of those. One was a company called Galaz, which we sold for 100 million a couple of years ago. There was a smaller one, Moon Ali, which is interesting, but is not going to make a material difference. So B&G is the big one. We agreed that we would carry Baverstock for the first $100 million, which was reached back in, I think, 2015. Since then, we've been using the proceeds of Galaz for both sides to fund their respective interests. We had 58, they had 42. We got to the point where it made no sense not to merge, and therefore putting it all together was a sensible way to do that. But I think by that stage, we'd certainly spent 130 odd million, and we continue to spend sensible amounts there. But I think we're getting to the point now where the revenues, although you didn't call them revenues during testing, are going to actually make a big dent in the cost of exploration. And
finally, if you could sum up the outlook for Caspian Sunrise for me.
I think it's very strong. I think we are in an established oil producing territory. We have a very successful field which we are in control of with 99%. We have already proved the shallows are highly valuable. We are in the process of proving that value also extends to the deep. I think we are well funded. I think that we have a very good news flow to come out in the remainder of this year and the first half of next year. And when we move the two assets I spoke out before, MGF and the two structures, MGF and Airshigul, into full production, there will be a dramatic turnaround in the cash flows, and this company will soon become very profitable. And then we're open to all kinds of other opportunities.
Clive Carver, Chairman of Caspian Sunrise, thank you for joining us. And as ever, thanks to you for watching.